Hi, I'm Hannah Wallace and welcome to FinextraTV. Kindly joining me in the virtual studio today is General Manager UK and Ireland of Mambu, Richard Morgans. Richard, thank you very much for joining us. It's good to have you on.
Likewise, thank you for having me.
No problem at all. Really good to have you on. And we're speaking off the back of UK FinTech Week, really exciting week for us. And one of the big topics is how digital innovations are shaping the future of banking. So quite a broad one, but homing in first on some of those top drivers we're seeing for change and disruption in the banking space. Perhaps you could expand on those for us.
Well, it's been going on for a while, but I think the last few years we've really started to see headway in open banking. Especially if we look at the payment space, the recent acquisition of Apple, of Credit Kudos, I think really sort of got a bit more of the industry, even outside of just general financial services, aware of some of the opportunities that it presents itself with. I think when you try and speculate what Apple might be doing in that regard, it's really about customer outcomes and customer centricity, which is, becoming incredibly more prevalent. Just even over the last few years, that change in consumer behavior out of force of options being limited, but also then a recognition and validation that people are open to change and can adapt accordingly. But going back into that open banking example, it really starts to bring to question about what else you can do to disrupt that sector. So migrating away from card rails is a potential, direct settlement with a bank. That again goes back into that customer centricity approach. So it's, what is a more secure method to complete a transaction? What is a more cost efficient method to complete a transaction? What is a more transparent way to process a transaction? It also culminates in this continual, rise of customer centricity, I think, when we look at new business models. I think even looking at the payments rail side, going to some of those sort of more technical standards that are being implemented with ISO 20022, again, it's, customer outcome first, fraud prevention, greater data analytics, better analysis of the customer. All of that, again, is trying to find ways in which we can reduce down fraud, create a more efficient and automated process, and ultimately a better customer outcome.
Brilliant. Well, that leads me quite nicely then into my next question, which is looking at the opportunities and challenges associated with realising the benefits of digital transformation. I mean, you've touched on some big topics already, but could you expand on those?
So first of all, it's really hard. I think even the most successful and seamless projects always, have their challenges, but challenges can be, transformed into learnings. And I'd say that when we look at digital transformation and the conversations we have generally with our customers and prospects looking at embarking on new greenfield projects or moving away from legacy technology into modern technology stacks, the thing which seems to always emerge as the sort of key indicator for performance or setting themselves up for performance is that cultural piece. So when we see from the customer side that there's clear alignment, commitment, and I think one of the most important aspects is understanding that it is complex, that it is hard, but ultimately that it's not about trying to look at realizable gains in the next 6 to 12 months. It's you are embarking on a transformational change. It's going to take years to realize some of that benefit. But if you've got that buy-in from the top down, but also from the bottom up, and reach that happy medium in between of everyone understanding what is required, what is the actual outcome of moving away from incumbent technology to modern technology, is that's when you start to realize that you can get some real commonality between somebody like us and the client, so that when you reach those, blockers or challenges of what needs to be done next, you're brought in together. It's that symbiosis, I think, that you expect to see more and more going into transformation. It's not an us and them in terms of vendor and client anymore. It's about bringing those two parties together and working on a common goal.
That's right. You've explained that very well. Thank you, Richard. And then how should banks be responding, building on that, and go about redefining their business models moving forward?
So do you know what, and I shouldn't say this, but you did send me the question in advance on this one because it gave me a bit of time to think about it, because people have talked a lot about business models and what does need to be redefined. And I'm not necessarily sure that the business model itself needs to radically change. I think it's that where you start with the problem in that business model is different. So it's nuanced, but it does make an impact. which is it goes back to that point around the customer first, which is something we've seen from the emergence of new challengers, neobanks, the SME lending space. It's all started with where the friction and frustration has been born from the customer. So where there has been that imbalance, and I think sometimes that friction in the relationship between the two, it's starting with that side first. It's not about where is the price point we can put this product on the market. It's what is the outcome that is solved by presenting this product on the market. So whilst it still probably results in hopefully the same outcome, which is a better customer outcome, a profitability for the bank, a slicker, smooth operation, it is about starting with the pain point first, not with what is the opportunity to exploit on the market. It may seem nuanced, but it is such a difference. Again, I go back to the customers that we serve. It's always started with their customers first. What are they solving in the market? What's the unmet need? And again, getting that embedded into your culture is a way in which you then start to think about redefining products, not in a radical way, but just always thinking about what is the benefit and outcome to the customer first, because typically solving that is what increases organic growth, customer advocacy, stickiness, retention, happiness from the customer. It is all about starting with that point first. And if we think about it truly for a time ourselves, we are all customers of these organizations. So it's just about thinking about what are the problems that you suffer day to day? What are the things that could be done to solve that? And the hardest bit always is how you embed that back into the business. So how do you get that attention back from the organization? And I think, we look at banks, the business models have started to change. We see appointments of chief customer officers, with real responsibility, and accountability from the regulator side, because it's thinking about detriment first, outcome, and what you can do to solve that.
Mm-hmm. That's a really interesting approach, and some pretty good advice weaved in there as well. Thank you for that. And that leads me into my final question then, which is something that we spoke about a lot during UK FinTech Week, which is, of course, embedded finance. That was a really hot topic. So that's what I want to end on today. Can you tell us what's the significance of embedded finance as we move forward into the future of banking? By no means a small question.
So again, it's customer outcome, isn't it? So you have to think about what do we mean by customer outcome? So it's not just about retention of the customer from one provider. It's about better competition on the market. And that's something which open banking, has played a significant part in. The Competition Markets Authority has really tried to find ways in which to be able to exploit technology to provide a more informed decision for that customer to be able to make a choice on their sort of route to market, product selection, whether they need to stay with a provider, how they can move. It started with the personal side, which has made headway. We've seen, businesses starting to try and sort of attack some of that kind of incumbent business model, but also on the embedded finance side, it's now about trying to provide that informed insight to the customer that we understand you, we can demonstrate affordability, and also the likelihood of success of you taking out some form of finance product. It's really hard though, because you've got the regulator on one side imposing these rules, and you've got businesses trying to wrestle with what do they do to embed that in. So do you start to integrate old technology with new technology? Do you look at transformation as a whole? Because these sorts of moments are the catalysts which, incentivize and create that, realization it's now about new technology first, because it's easier in the long term to adapt to that now. But, we continue to see, I think, the UK leading the way in terms of setting out standards and policy, which should be adopted by other countries inside Europe and outside, that shows that, absorbing information from the customer, but presenting that back to them in a way that gives them that informed insight into, actions that they wish to take and they decide upon. That's the future of embedded finance.
Well, brilliant. A lot to take into account there. So watch this space, it's safe to say. Richard, we'll leave it there for now, but thank you so much for calling in and sharing your insights today. It's been a pleasure. Thank you.
Thank you very much.